My colleague Charu. SEBI panel may propose cap on big intraday bets is what we're learning. SEBI's secondary market panel has proposed a 1,500 crore cap on intraday index derivative trades. This follows SEBI's scrutiny of Jane Street. At present, there is no limit on intraday. Exchanges have been asked to monitor big intraday trades closely. Sources say SEBI is also looking at broker level limits. That's important. Of course, we had earlier reported that these positions were under review, and this is what you can, possibly see panning out now when it comes to intraday trades. We spoke a little while earlier about BSE, Angel One, etc., and the capital market space. This is clearly something that the regulator is very happy to go after. So, one space you need to watch out for. Okay. Neeraj Devan, just quick views coming in on what we're reporting this afternoon, and we'll get Charu in just about a minute for more details on it. But we already saw some action of this coming in with, SEBI indicating that they want to change the frequency of expiry from weekly maybe to once in 2 weeks or something like that. Now we're talking about caps also of intraday trade.
I think definitely all this will impact the volumes because if you see last couple of years or 3-4 years, the volumes had gone up a lot because of the weekly expiries. Earlier they've limited it to one per exchange. Now they've put a further limit or make it fortnightly. But it will definitely impact the volumes on stock exchanges and or for the broker. So let's see how it actually comes because still there are proposals. What actual shape they take will depend on, I think, a lot of representation by the, by the broker community, by the exchanges. So let's see what finally comes out of it. But if this is what they are planning to do, a broker level limit, an intraday limit, and reducing the number of expiries, the volumes will definitely get impacted on the exchange.
Charu's joining in with more details. Charu, at what level or what stage are these proposals?
So, as NDTV Profit reported exclusively on the morning of August 19, a meeting was held with the Secondary Market Advisory Committee of Securities and Exchange Board of India, and the members were juggling with a lot of proposals. One of these proposals was to, reintroduce the topic of intraday position limits. Now, currently there is no limit on these intraday trades. However, SEBI is looking to get into this again after the Jane Street saga. So, to sort of control and curb proliferation of any sort of market manipulation and to protect the innocent investors, SEBI is sort of thinking if some, limit on intraday positions can be brought in. Now, this is something that was also brought in as a suggestion while the open interest calculation consultation was brought in 2 to 3 months back. However, when the final circulation on the same came out, intraday position limit suggestion was dropped because of the market, sentiment and the market suggestions that were sent in response to that proposal. However, it is being explored again, and we'll get to know as to what developments take place further. The limit that is being considered currently is about 1,500 crore rupees.
Okay, this is Charu, thanks for that. And this now is becoming a bit of a predictable piece that wherever there is a measure or a move happening which involves the really big fish, which could lead to, for lack of a better word, manipulation of any fashion, SEBI is clamping that down.
Yeah.
And
aggressively.
Very aggressively. And no measures held back. So I think that's interesting. I wonder if this further quells the earnings projections for high frequency brokers and exchanges, etc. And does that hinder the near-term earnings multiples for these businesses? Neeraj Devan, and it's fine if it happens because you ultimately want to protect every consumer in this or every participant in this long chain. But I wonder, this whole piece that is happening, do you reckon that stocks like NSE, BSE, or NSE is not a stock, but well, it kind of gets invested and traded on the private markets like a stock, or a Angel One, etc., could all come under a bit of pressure?
Yeah, I think we already saw some pressure coming in also yesterday in some of these stocks like Angel One or BSE. I think there will be near-term pressure on their earnings if all these measures are brought into force, like lesser expiries and even intraday limits. If all these things are brought into play, then they will get impacted for a shorter term. Though over medium to long term, the volume in the I think monthly will improve. So slowly things will get averaged out. But initially there's going to be some disruption there.